What led to the collapse of Silicon Valley Bank? That's a question many have been asking following the recent banking crisis that has seen the bank's downfall. The answer, like the banking system itself, is complex and multifaceted. The tale begins with an economic slowdown, rising interest rates and bond market volatility. The once thriving Silicon Valley Bank began to falter under these challenging market conditions, as managing asset values amid fluctuating interest rates proved more than the bank could bear. The bank's rapid decline led to regulatory intervention, causing ripples in the banking sector and sparking fears of a broader banking system crisis. Silicon Valley Bank's collapse didn't just affect the banking sector, it had a broader impact, reaching even the tech industry. Startups faced challenges in accessing funds and covering expenses, causing even established companies like the New York-based toy company Camp to reach out to customers for support. However, despite the initial fears, analysts believe that the impact is currently contained to Silicon Valley Bank due to its industry-specific exposure. Yes, there are echoes of the 2007 to 2008 financial crisis, but there are also significant differences. Regulatory reassurances and post-2008 reforms have tempered anxieties about systemic risks. Yet, uncertainty looms over the effectiveness of central bank strategies amidst the evolving banking crisis. Federal regulators have testified before Congress regarding the collapse of Silicon Valley Bank, sparking calls for stricter regulations and accountability for the bank's executives. Market volatility ensued, but the stock market showed resilience, driven in part by the Fed signaling a pause in interest rate hikes. So, what can we take away from the collapse of Silicon Valley Bank? Firstly, the banking system is complex and susceptible to a variety of factors, including economic slowdowns, interest rates, and bond market volatility. Secondly, the collapse of a bank can have far-reaching effects, impacting even seemingly unrelated industries. And lastly, while the banking industry has safeguards in place to prevent a systemic crisis, uncertainty remains about the effectiveness of these measures. The story of Silicon Valley Bank's collapse serves as a stark reminder of the challenges banks face in adapting to changing market conditions. It's a tale of rapid decline, regulatory intervention, market volatility, and resilience. It's a story that continues to unfold, shaping the future of the banking industry.